Infinite banking and the Rockefeller method. The secret banking system of the wealthy. My friend, what if I told you that the wealthiest families in America don't use banks the way you do? What if I told you that John D. Rockefeller, the man who built a $400 billion fortune, discovered a method so powerful that his family has stayed wealthy for over 5 generations? What if everything you know about banking, saving, and building wealth is exactly backwards? Here's the truth that nobody tells you. While you're depositing your money in a bank earning almost nothing, the bank is using your money to make massive profits. While you're asking the bank for permission to borrow your own money, wealthy families have created their own banking systems. While you're paying interest to banks, the Rockefellers have been collecting interest for over a century. This is infinite banking, and today you're going to learn exactly how it works. Think about it for a moment. Really think about it. Where does your money go? You earn a paycheck. You deposit it in a bank. The bank pays you maybe 1% interest if you're lucky. Then what happens? The bank loans your money to other people at 5, 10, 20% interest. They make massive profits. You get pennies. And when you need money, you have to beg the same bank to loan you your own money back. They charge you interest. They check your credit. They might say no. You're asking permission to access money you deposited with them in the first place. Poor people let banks control their money and pay for the privilege. Rich people become their own bank and profit from it. Poor people are customers of the banking system. Rich people own the banking system. This is the fundamental difference. And Rockefeller understood this better than anyone in history. If this is resonating with you, hit that subscribe button right now, because we're building a community of people who refuse to play the broke person's game. People who are ready to learn how the wealthy actually build and protect generational wealth. And I want you to be part of this movement. Here's what we're covering today. What infinite banking actually is and why it's so powerful. How the Rockefeller family used this method to stay wealthy for 5 generations. The specific structure they created and how you can replicate it. The mathematics that make this system work. Why traditional banking keeps you poor while infinite banking makes you wealthy. And the step-by-step process to implement this in your own life starting today. This isn't theory from a textbook. This isn't motivational fluff. This is the actual wealth-building system used by America's richest family. And it's available to you right now. Let's dive in. What is infinite banking? Here's where we start. Understanding what infinite banking actually is. Because most people have never heard of this concept, and those who have often misunderstand it completely. Infinite banking is a wealth-building strategy where you become your own banker. You create your own private banking system. You deposit money into it. You borrow from it. You pay interest to yourself. You keep all the profits. And the system grows infinitely over generations. Let me break this down in simple language that anyone can understand. Traditional banking works like this. You deposit money. The bank keeps it. They pay you minimal interest. When you need money, you borrow from them. You pay them interest. They profit. You pay. Infinite banking flips this completely. You deposit money into a specially designed whole life insurance policy. Your money grows tax-deferred with guaranteed returns. When you need money, you borrow against your own policy. You pay interest to yourself. Your money continues growing even while borrowed. You profit coming and going. This is the fundamental concept. You're removing the bank from the equation. You're becoming the bank. You're keeping the profits that banks would normally take from you. Poor people deposit money in banks and beg to borrow it back. Rich people create their own banking system and profit from themselves. Poor people make banks wealthy. Rich people make themselves wealthy. Here's why this is so powerful. In traditional banking, your money is working for the bank. In infinite banking, your money is working for you. In traditional banking, interest flows away from you. In infinite banking, interest flows to you. In traditional banking, the bank profits from every transaction. In infinite banking, you profit from every transaction. Rockefeller understood this at a level that most people never reach. He saw that the banking system was designed to extract wealth from customers and transfer it to bank owners. So he created his own banking system. He became the bank. And his family has profited from this structure for over 100 years. Think about the mathematics, my friend. When you deposit money in a traditional savings account, you might earn 1% annually, but inflation is running at 3 to 5%. You're losing purchasing power every year. You're actually getting poorer while thinking you're saving money. Meanwhile, the bank takes your deposits and loans them out at much higher rates. They're making 5, 10, 20% on your money. They're building massive profits. You're subsidizing their wealth with your deposits. This is the game. And poor people play it their entire lives without understanding what's happening. They think they're being responsible by saving in a bank. They don't realize they're being systematically impoverished by the very institution they trust. But infinite banking changes everything. Instead of earning 1% while losing purchasing power, you're earning guaranteed returns of 4 to 6% depending on the policy design. Instead of the bank profiting from loaning out your money, you're profiting from loaning to yourself. Instead of paying interest to banks, you're paying interest to your own system. And here's where it gets really powerful. Even when you borrow from your own policy, your money continues growing as if you never borrowed it. This is called uninterrupted compounding. Your policy cash value keeps earning returns on the full amount. You're using the money for purchases or investments, but you're still earning returns on it. This is something traditional banking can never offer. When you withdraw money from a bank account, it stops growing. When you borrow from your infinite banking policy, it keeps growing. You're using your money in two places simultaneously. This is financial leverage that most people never understand. Let me give you a concrete example. Say you have $50,000 in your infinite banking policy. You need to buy a car for $30,000. You borrow $30,000 from your policy, but your $50,000 keeps earning returns as if nothing was borrowed. You're earning returns on $50,000. You're using $30,000 for the car, and you're paying interest back to yourself on the loan. This is the power of infinite banking. This is why Rockefeller called it the eighth wonder of the world, according to his biographers. This is how generational wealth is built and protected. So here's your first action step. Shift your mindset from being a bank customer to being a bank owner. Stop thinking about deposits and withdrawals. Start thinking about creating your own financial system. This mental shift is the foundation of everything that follows. Remember, traditional banking enriches banks at your expense. Infinite banking enriches you at every transaction. Banks want you as a customer. You want to be the bank. This is the fundamental principle. The Rockefeller family structure. Now let's talk about how the Rockefeller family actually implemented infinite banking, because understanding their specific structure reveals why this method is so powerful for building generational wealth. John D. Rockefeller didn't just save money. He didn't just invest in stocks or real estate. He created a comprehensive financial system designed to keep wealth in the family forever. And at the center of this system was what we now call infinite banking. Here's how they structured it. And pay attention, my friend, because this is where most people miss the profound genius of this approach. The Rockefellers created a family bank, not a literal bank with a charter and regulations, but a private financial system that functioned like a bank. They capitalized this family bank with whole life insurance policies, lots of them, policies on every family member, policies owned by family trusts, policies designed for maximum cash value, accumulation. These policies served multiple purposes simultaneously. First, they provided death benefits that would pass tax-free to the next generation. Second, they accumulated cash value that could be borrowed against for investments or expenses. Third, they created a pool of capital that the family controlled completely. Fourth, They generated guaranteed returns regardless of market conditions. This is systems thinking at its finest. One financial vehicle serving multiple strategic purposes. This is how wealthy families think. Poor people look for single-purpose solutions. Rich people create multi-purpose systems. Here's the specific structure they used. They would take out large whole life insurance policies, not term insurance, whole life. These policies were specially designed with high early cash value. They were overfunded beyond the minimum premium required. This accelerated cash value accumulation dramatically. Then, instead of keeping their operating capital in banks, they kept it in these policies. When they needed money for a business investment, they would borrow from their own policies. They would pay themselves back with interest. The interest they paid went back into their own system, not to a bank. And the policy cash value continued growing uninterrupted. Think about how this compounds over time. Every loan they made to themselves, every interest payment back to their own system, every dollar of growth in the policy, all of this stayed within the family structure. Nothing leaked out to banks or other institutions. The system was closed. It was infinite. It compounded forever. Poor people leak money out of their financial system constantly. Rich people create closed-loop systems where money circulates internally forever. Poor people enrich others. Rich people enrich themselves and their descendants. But here's where it gets even more sophisticated. The Rockefellers didn't just use these policies for borrowing. They used them as collateral for even larger loans from banks. Think about this strategy. They would borrow from banks using their policy cash value as collateral. They would invest that borrowed money into businesses or real estate that generated returns higher than the loan interest. They would pay back the bank loan. Their policy would keep growing, and they would keep the profits from the investment. This is leveraging leverage. This is how you multiply wealth exponentially. This is the thinking that separates billionaire families from everyone else. And they passed this system down through generations. Children were taught from birth about the family banking system. They learned to borrow from the family bank for education, business ventures, real estate. They learned to pay back the loans with interest. They learned that this system was the foundation of family wealth. They became stewards of the system rather than consumers of it. This is generational wealth building. This is how you create a fortune that lasts centuries. Not through one big win, not through lucky investments. Through systematic structure that compounds over generations. Let me contrast this with how most families operate. Most people earn money. They spend most of it. They save a little in a bank, earning nothing. When they need money, they borrow from banks at high interest. They pay interest to banks their entire lives. They die with little to pass to their children. Their children start from scratch. The cycle repeats. Generational poverty. But the Rockefeller approach: earn money, deposit into family banking system, borrow from own system when needed, pay interest to own system. System grows continuously. Pass growing system to children. Children use the same system. System compounds over generations. Generational wealth. See the difference? One approach leaks wealth constantly. The other approach contains and compounds wealth infinitely. And here's what's crucial to understand. This wasn't about the amount of money. It was about the structure. You could implement the same structure starting with far less than the Rockefellers had. The principles are identical whether you're starting with 10,000 or 10 million. The structure is what matters. So here's your action step. Study how wealthy families structure their finances. Notice they don't keep money in checking accounts earning nothing. Notice they don't borrow from commercial banks for every need. Notice they create private systems. Start thinking structurally, not transactionally. This shift in thinking is worth millions over a lifetime. Remember, the Rockefellers stayed wealthy for 5 generations, not through luck, but through structure. They created a closed-loop system. They eliminated financial leakage. They taught each generation to be stewards rather than consumers. This is how generational wealth is built. The mathematics of infinite banking. Now let's get into the numbers, because mathematics don't lie. And the mathematics of infinite banking versus traditional banking reveal exactly why this system is so powerful. I'm going to show you real numbers, real comparisons, real examples, so you can see with absolute clarity why infinite banking builds wealth while traditional banking keeps you broke. Let's start with a simple example that anyone can understand. Say you have $100,000 to work with over the next 30 years. You have two choices. Put it in a traditional bank savings account, or put it into an infinite banking policy. Traditional banking path. You deposit $100,000 into a high-yield savings account earning 1% annually. After 30 years, assuming you never touch it, you'll have approximately $135,000. Not bad, right? You made $35,000. But wait, inflation averaged 3% annually over those 30 years. The purchasing power of $135,000 in 30 years is equivalent to about $56,000 in today's money. You actually lost $44,000 in purchasing power. You got poorer while thinking you were saving. Meanwhile, during those 30 years, you needed money 5 times for various needs. Each time, you borrowed from a commercial bank at an average of 7% interest. Over those 5 loans, totaling $200,000 borrowed over time, you paid approximately $60,000 in interest to the bank. So your final position: lost $44,000 to inflation, paid $60,000 in interest to banks. Net result: you're $104,000 poorer than when you started, even though your account shows growth. This is how traditional banking impoverishes people. Infinite banking path. You put the same $100,000 into a specially designed whole life insurance policy. It earns an average of 4 to 5% annually guaranteed plus dividends. After 30 years, your cash value has grown to approximately $350,000. This is tax-deferred growth, so you keep it all. During those same 30 years, you needed money 5 times for the same purposes. Each time, you borrowed from your own policy at 5% interest. But here's the key. Your policy cash value continued growing on the full amount as if nothing was borrowed, and the interest you paid went back to yourself, not to a bank. Over those 5 loans, totaling $200,000 borrowed over time, you paid approximately $50,000 in interest, but you paid it to yourself. It went into your own policy. You paid yourself back. The $50,000 in interest increased your cash value. So your final position: $350,000 in cash value, plus all the interest you paid to yourself, plus uninterrupted compounding on the full amount, plus a death benefit of approximately $1 million that will pass tax-free to your heirs. This is how infinite banking creates wealth. Let me make this even clearer with a side-by-side comparison. Traditional banking after 30 years. Account $35,000. Purchasing power after inflation, $56,000. Interest position, negative $4,000. Poorer than you started. Path passed to heirs, $56,000, taxable. Infinite banking after 30 years. Purchasing power, $350,000, tax-deferred, protected from inflation. $80,000, stayed in your system. Net position, $350,000, wealthy and growing. Passed to heirs, $1 million plus, tax-free death benefit. The difference is staggering. Over $300,000 in your favor. And this is just one generation. Now compound this over multiple generations using the same structure. Now you understand how the Rockefellers have stayed wealthy for over a century. Poor people look at these numbers and don't believe them. Rich people look at these numbers and implement immediately. Poor people find reasons why it won't work. Rich people find ways to make it work better. Here's another critical mathematical advantage: uninterrupted compounding. This is the secret sauce that most people never understand. In traditional banking, when you withdraw money, it stops growing. Simple, obvious. If you take out $10,000, you're now earning interest on $90,000 instead of $100,000. Linear thinking, basic math. But in infinite banking, when you borrow against your policy, your full cash value keeps growing as if you never borrowed anything. You borrow $10,000, but you're still earning returns on the full $100,000. The insurance company loans you money using your cash value as collateral, but your cash value continues compounding uninterrupted. This is the magic. This is why Einstein supposedly called compound interest the eighth wonder of the world. This is exponential mathematics that creates generational wealth. Let me show you the power of this with concrete numbers. Say you have $50,000 in policy cash value earning 5% annually. You borrow $25,000 to buy a car. Traditional thinking, you now have $25,000 earning 5%. That's $1,250 annual growth. Infinite banking reality. You still have $50,000 earning 5%. That's $2,500 annual growth. Plus, you have the $25,000 car. Plus, if you pay yourself back at 6% interest over 5 years, you'll pay yourself approximately $33,000 total, with $8,000 going back into your system as interest payments to yourself. End result after 5 years? Your $50,000 grew to approximately $64,000, uninterrupted compounding. Plus, you paid yourself $8,000 in interest. Total system value, $72,000. Plus, you have the car. You used your money and grew it simultaneously. This is mathematical magic that traditional banking can never offer. This is the difference between linear wealth, traditional, and exponential wealth, infinite banking. So here's your action step. Run the numbers for your own situation. Calculate what you're paying in interest to banks annually. Calculate what you're losing to inflation in savings accounts. Calculate what you could be earning with uninterrupted compounding in an infinite banking system. The mathematics will shock you into action. Remember, mathematics don't lie. Traditional banking creates mathematical poverty. Infinite banking creates mathematical wealth. The numbers prove it conclusively. The only question is whether you'll act on the evidence. Why traditional banking keeps you poor. Now let's talk about why the traditional banking system is designed to keep you poor. Because once you understand this, you'll never look at banks the same way again. Banks are not your friends. They're not looking out for your interests. They're profit-maximizing institutions designed to extract wealth from you as efficiently as possible. And they're very, very good at it. Here's how the game works. And pay attention, my friend, because this is the game that 95% of people play their entire lives without realizing they're being systematically impoverished. You deposit your money in a bank. The bank pays you maybe 1% interest. They're required by law to keep only a small fraction of your deposit in reserve, maybe 10%. The other 90%? They loan it out at much higher interest rates. 5%, 10%, 20% for credit cards, 30% for some personal loans. Do the math. They pay you 1% on your $100. They keep $10 in reserve. They loan out $90 at an average of 10%. They earn $9 on your deposit. You earn $1. They make 9 times what you make on your own money. This is called fractional reserve banking, and it's the biggest wealth transfer system in modern history. Money flows from depositors to banks, from poor people to rich institutions, from you to them. Poor people deposit money and earn pennies. Rich people own banks and earn fortunes. Poor people are on the customer side of banking. Rich people are on the ownership side. But it gets worse. When you need money, you go to the same bank where you deposited your funds. You ask for a loan. They check your credit. They evaluate your worthiness. They might say no. They're literally evaluating whether to loan you your own money back. If they approve you, they charge you interest far higher than what they paid you. You deposited money at 1%, they loan it back to you at 7%. They're making a 6% spread on your own money. You're paying them for the privilege of accessing your own funds. This is insane when you really think about it. This is a system designed to enrich banks at your expense, and most people never question it because they've been conditioned to think this is normal. Think about a typical person's financial life. They deposit paychecks into checking accounts earning 0 interest. They keep an emergency fund in savings earning 1% while losing 3% to inflation. They have a mortgage charging them 4%, a car loan at 7%, credit cards at 20%, student loans at 6%. They're earning 1% on savings while paying an average of maybe 8% across all their debts. The spread? 7% flowing away from them to financial institutions. Over a lifetime, this amounts to hundreds of thousands of dollars transferred from the individual to banks. This is how banks profit. This is how you stay poor. This is the system working exactly as designed. But here's what makes it even more predatory. Banks have convinced people that debt is normal, that everyone has a mortgage, that car loans are just part of life, that credit cards are necessary. They've normalized the very products that make them wealthy and keep you broke. Poor people think debt is normal and accept it. Rich people know debt enriches lenders and avoid consumer debt completely. Poor people finance everything. Rich people buy assets that finance themselves. And the education system never teaches you this. Schools don't explain how banking actually works. They don't show you the mathematics of compound interest working against you. They don't reveal that banks are designed to profit from your financial ignorance. Why? Because the system benefits from your ignorance. An educated population wouldn't deposit money at 1% while borrowing at 7%. They wouldn't accept this obvious wealth transfer. So the system keeps you ignorant through financial education that's designed to create good bank customers, not wealthy individuals. Rockefeller understood this better than anyone. He saw that the banking system was fundamentally extractive. It was designed to extract wealth from the many and concentrate it in the few. So he created his own system that was fundamentally accumulative. It was designed to accumulate wealth within his family and protect it from extraction. This is why infinite banking is so revolutionary. It removes you from the extractive system. It stops the wealth transfer. It reverses the flow. Instead of paying interest to banks, you pay it to yourself. Instead of earning 1% on deposits, you earn 4 to 6% on cash value. Instead of begging for loans, you borrow from yourself. Instead of enriching institutions, you enrich your family. This is the difference between playing the bank's game and creating your own game, between being a pawn in their system and being the king of your own system. Here's another way banks keep you poor: opportunity cost. Every dollar you pay in interest to a bank is a dollar that could have compounded for you. Over decades, this opportunity cost is massive. Say you pay $2,000 annually in interest to banks over 30 years. That's $60,000 in direct payments. But if that $2,000 per year had been invested at 5% returns, it would have grown to $133,000. The true cost isn't $60,000, it's $133,000. That's the opportunity cost of using traditional banking. Multiply this across all your debts and deposits over a lifetime, and you're looking at opportunity costs in the millions. Literally millions of dollars that could have been yours, but went to banks instead. Poor people pay millions in opportunity costs over their lifetime without realizing it. Rich people calculate opportunity costs and structure finances to minimize them. Poor people see only the obvious costs. Rich people see the hidden costs that dwarf the obvious ones. So here's your action step. Calculate your personal wealth transfer to banks. Add up all interest you pay annually on all debts. Subtract any interest you earn on deposits. The difference is your annual wealth transfer. Multiply by 30 years. Add opportunity cost. That's the true cost of traditional banking to you personally. The number will shock you into action. Remember, traditional banking is designed to extract wealth from you systematically. The system isn't broken. It's working perfectly for banks. You staying poor isn't a bug. it's a feature. Understanding this is the first step to opting out of the system and creating your own. How to implement infinite banking. Now, let's get practical. How do you actually implement infinite banking in your own life? What are the specific steps? What do you need to know? What mistakes should you avoid? This is where theory becomes practice. This is where understanding becomes action. This is where your financial transformation begins. Step 1. Find a qualified advisor. This is critical. Not every financial advisor understands infinite banking. Most don't. Many will actively discourage you because they make more money selling you other products. You need an advisor who specializes in infinite banking, who understands whole life insurance designed for cash value accumulation, who knows how to structure policies for maximum efficiency, who can explain the strategy clearly without jargon. How do you find this person? Search for Infinite Banking Specialist or Bank on Yourself Advisor in your area. Interview multiple advisors. Ask specific questions. How many infinite banking policies have you designed? What's your philosophy on whole life insurance? How do you structure policies for maximum cash value? Poor people take advice from any advisor without vetting. Rich people interview multiple advisors and choose the best. Poor people trust blindly. Rich people verify everything. Listen closely to this, my friend. The wrong advisor will cost you tens of thousands in lost efficiency. The right advisor will save you hundreds of thousands over your lifetime. This decision matters. Take it seriously. Step 2. Understand policy design. Not all whole life insurance policies are created equal. Standard whole life policies are designed to maximize death benefit. That's not what you want. You want a policy designed to maximize cash value accumulation as early as possible. This requires specific riders and design elements. Paid-up additions rider. This allows you to overfund the policy beyond the base premium. This accelerates cash value accumulation dramatically. This is non-negotiable for infinite banking. Term insurance rider. This provides additional death benefit cheaply, allowing more of your premium to go toward cash value instead of insurance costs. This improves efficiency significantly. Dividend option. You want dividends to purchase additional paid-up insurance, not be taken as cash. This compounds your growth exponentially. Your advisor should understand these design elements intuitively. If they don't, find a different advisor. The policy design is too important to trust to someone who doesn't specialize in this strategy. Step 3. Determine your funding level. How much should you put into your infinite banking policy? This depends on your financial situation, but here are some guidelines. Start with at least what you could comfortably save monthly. If you can save $500 per month consistently, that's your starting point. Don't overextend initially. This is a long-term system. Consistency matters more than size. The goal is to build your policy to a size where you can self-finance major purchases, car purchases, real estate down payments, business investments. This typically requires policies with $50,000 to $100,000 in annual premium for most middle-class families. But you don't have to start there. You can start smaller and add policies over time. Many people start with one policy funded at $10,000 to $20,000 annually, then add additional policies as income grows. Poor people think they can't afford to implement this strategy. Rich people find ways to afford what builds wealth. Poor people find excuses. Rich people find solutions. Here's a key insight. You're not adding a new expense. You're redirecting existing cash flow. Instead of putting money in a savings account earning nothing, redirect it to your infinite banking policy earning 4 to 6%. Instead of making extra principal payments on your mortgage earning implicit returns of 4%, redirect to your policy earning more. You're not spending more, you're allocating smarter. Step 4. Build your cash value. Once your policy is established, your primary goal for the first few years is building cash value. You're funding the policy consistently. You're watching the cash value grow. You're learning how the system works. This requires patience. Whole life insurance is not a get-rich-quick scheme. It's a get-rich-for-certain system. The first few years show modest cash value growth as policy costs are covered. But around year 5 to 7, cash value growth accelerates significantly. By year 10, you have substantial capital available for borrowing. Poor people want immediate gratification and quit early. Rich people understand delayed gratification and stay the course. Poor people judge investments by year 1 results. Rich people judge by decade 10 results. During this building phase, resist the temptation to borrow. Let the system grow. Let compound interest work its magic. Build a foundation strong enough to support your infinite banking strategy for life. Step 5. Start borrowing strategically. Once you have meaningful cash value built up, typically $50,000 or more, you can start borrowing for strategic purposes. But here's what's crucial. Borrow strategically, not emotionally. Good reasons to borrow from your policy. Financing a car instead of using bank financing. Funding a business investment with positive expected returns. Making a real estate down payment. Covering emergency expenses instead of using credit cards. Bad reasons to borrow. Funding consumption you can't afford. Buying liabilities that don't generate returns. Supporting a lifestyle beyond your means. The key is this. When you borrow from your policy, commit to paying yourself back with interest just as you would pay a bank. This is non-negotiable. You're not stealing from your future self. You're borrowing from yourself and paying yourself back with discipline. Set up automatic payments back to your policy. Treat these payments with the same priority as paying a bank. Actually, treat them with higher priority because you're paying yourself. Poor people borrow from themselves and never repay. Rich people borrow from themselves and repay with discipline. Poor people steal from their future. Rich people invest in their future. Step 6. Scale the system. As your income grows and your first policy matures, consider adding additional policies. Some people eventually have 5, 10, or more policies, creating a robust private banking system. Why multiple policies? Diversification across different companies. Ability to borrow from one while another continues growing undisturbed. Staggered maturity dates providing flexibility. Enhanced death benefits protecting family. The Rockefellers didn't have one policy, they had dozens. Policies on every family member. Policies owned by different entities. A comprehensive system providing maximum financial flexibility. You may not need dozens, but scaling beyond one policy creates options and security that a single policy cannot provide. Step 7. Teach the next generation. This is how you make it generational. Teach your children about the family banking system. Explain how it works. Show them the numbers. Let them borrow from the system for appropriate purposes. Teach them to pay it back with discipline. Make them stewards of the system rather than consumers of it. Pass down not just the money, but the knowledge. Not just the assets, but the philosophy. Not just the wealth, but the wisdom. This is how the Rockefellers have stayed wealthy for 5 generations. Not through luck, through systematic transfer of financial knowledge and structure. So here's your action step. If you're serious about implementing infinite banking, take action this week. Research advisors, schedule consultations, learn about policy design, run illustrations, make a decision. The best time to start was yesterday. The second best time is today. Remember, implementation separates dreamers from builders. Knowledge without action is worthless. Understanding without execution creates no wealth. The system is proven. The strategy is sound. The only variable is your willingness to act. Your generational wealth journey begins now. My friend, we've covered the complete infinite banking strategy. Let me bring this all together. We learned what infinite banking is, becoming your own banker, creating your own private financial system, keeping profits that banks would normally take from you. We studied the Rockefeller family structure, how they used whole life insurance policies to create a closed-loop system that's kept them wealthy for 5 generations. How they taught each generation to be stewards rather than consumers, how they built a true family bank. We examined the mathematics, how infinite banking creates $300,000 more wealth over 30 years compared to traditional banking, how uninterrupted compounding multiplies returns, how the numbers prove this strategy conclusively. We exposed why traditional banking keeps you poor, how banks profit from the spread between what they pay you and what they charge you, how they've normalized debt to keep you paying interest forever, how the system extracts wealth from you systematically. We outlined implementation steps, finding qualified advisors, understanding policy design, determining funding levels, building cash value, borrowing strategically, scaling the system, teaching the next generation. This is the complete blueprint. This is how generational wealth is built. This is the Rockefeller method available to you today. But here's what you must understand. Knowledge without action is worthless. You can understand everything perfectly, but if you don't implement, nothing changes. Understanding doesn't create wealth. Implementation creates wealth. So what will you do? Will you keep playing the traditional banking game that's designed to keep you poor? Or will you create your own infinite banking system that's designed to make you wealthy? Will you keep depositing money at 1% while borrowing at 7%? Or will you become your own bank, earning returns both ways? Will you keep transferring wealth to institutions? Or will you start accumulating wealth for your family? The choice is yours. But the system is proven. The Rockefellers proved it. Countless other families have proved it. The mathematics prove it. The structure works. If this audiobook provided value, I need you to do 3 things. First, subscribe to this channel and turn on notifications. We're building a community of people who understand how wealth is really built. People who refuse to accept the traditional banking scam. People who are creating their own financial systems. Join us. Second, share this with someone who needs to understand infinite banking. Someone tired of making banks rich. Someone ready to become their own bank. Someone who wants to build generational wealth. Send them this link. Third, comment below. Tell me, what's preventing you from implementing infinite banking? What questions do you have? What's your first step? I read every comment. Let's build wealth together. Let me tell you something, my friend. I believe in you. I believe you can implement this strategy. I believe you can become your own bank. I believe you can build generational wealth. But my belief isn't enough. You have to believe it. You have to take action. You have to commit. The Rockefellers weren't special. They weren't lucky. They weren't more intelligent than you. They just understood a system and implemented it with discipline. They became their own bank. They stopped enriching other banks. They built a structure that lasted generations. You can do the same, starting today, starting right now. The system is available. The knowledge is yours. The structure is proven. The only variable is your action. So commit now. Research advisors this week. Schedule consultations this month. Design your first policy this quarter. Start your infinite banking system this year. This is how you transform from someone who makes banks wealthy to someone who builds family wealth. Thank you for listening. Thank you for being someone who seeks real financial knowledge. Thank you for refusing to accept broke thinking. Now go out and implement the Rockefeller method. Become your own bank. Build generational wealth. Your infinite banking journey begins now. Let's build wealth together, my friend. The system is waiting. The opportunity is now. Your wealthy future is ready to be built. All that remains is your decision and your action. Make it today.